Wonderful. So good morning, everyone, and welcome to H&R Block's Tax Tips for Small Business webinar. Thank you so much for joining us. My name is Christy, and I'll be your moderator today. I just have a few words of introduction and some housekeeping items, and then I will pass it over to our expert to get started. Firstly, in the spirit of reconciliation, I would like to start by acknowledging that H&R Block Canada is headquartered on the traditional territories of the Blackfoot Confederacy, Tsuut'ina at the Îyârhe Nakoda Nations, the Métis Nation, Region 3, and all people who make their homes in the Treaty 7 region of Southern Alberta. As we meet today on a virtual platform, I'd like to take a moment to acknowledge the importance of the lands which we all call home. We do this to reaffirm our commitment and responsibility to improving relationships between nations and improving our own understanding of local Indigenous peoples and cultures. So as we gather here, we're excited to celebrate Small Business Week, which is a time to recognize and honor the remarkable contributions entrepreneurs make to the Canadian economy and the communities we all live and work in. Your dedication and innovation drive growth, and today we want to ensure you have the tools you need to thrive, especially as tax season approaches. The goal of the webinar is to empower you with knowledge that will help you prepare for tax season, allowing you to focus on what truly matters, which is growing your business and serving your clients. We have allocated time for a Q&A session at the end, so please utilize the Q&A feature just at the bottom of the screen there to submit your questions throughout, and we will do our best to answer as many as we can at the end. Finally, as a token of our appreciation for your time today and a more meaningful way to acknowledge your contributions, we will be sending out an exclusive special offer just for attendees of the webinar, so you can save when you file your tax return with us this year. So keep an eye out in your inbox for that. With that, I'm thrilled to introduce my brilliant colleague, Yannick Lemay, H&R Block's Senior Learning Tax Specialist. Yannick brings over 10 years of experience in business tax, and he has a wealth of knowledge from his time as an accounting firm owner. He now leads the training for all of H&R Block's business tax experts, making him a trusted resource on business tax matters with a deep understanding of Canadian, Quebec, and US tax laws. So without further ado, I'll pass it over to you, Yannick.
Yes, thank you, Christy. Good morning, everyone. Good afternoon if you're joining from the East. I hope everyone is doing great, ready to talk about taxes. As Christy mentioned, today we are covering a few tips, a few tricks to help you navigate taxes. Today's presentation works both if you are a self-employed. So what we call a self-employed would be someone that is synonyms would be a sole proprietor, would be a gig worker, freelancer. If you're using a digital platform to earn additional income, for example, Uber, Lyft, Fiverr, Turo. So all these fit in the category of self-employed. So we have tips for you in today's presentation. We also have tips for people that have already incorporated their business. So if you're using a different legal structure, some of the tips today will also help you navigate your taxes. So let's get started with our presentation. Maybe you have here the agenda, so the different topics we're going to be covering. So we'll be talking about well, choosing a year end, right? So what's to keep in mind? When should you register to GST, HST, and when you do so, is it beneficial? Are you in a situation where it would be beneficial to register to the quick method of accounting? So we'll be talking about that. And this quick method of accounting, as I've mentioned, works for both if you're a sole proprietorship or if you have incorporated your business. We'll also be talking about different deductions that might apply to your situation. So the most common ones, so if you're using your personal vehicle for your business, meals, also the business use of your home, which is more common these days. And then we're going to have some time for some questions at the end. So as Christy mentioned, if you have any questions throughout the presentation, you can use the Q&A function that we have in Zoom. Yes, and at the end, I'll try to answer the most questions that I can with the time we have. All right. So just before we get in depth in our topics, just a quick disclaimer to keep in mind that the different advice that we give in today's presentation are general advice, so they might not apply to every specific situation. If you, we know, right, taxes are very nuanced. There's a lot of situations. Sometimes just a little detail in your situation might make a big difference in how you would apply the advice we're giving you in today's presentation. So be careful with that. Always consult with a professional if you're in a special situation or if you're not sure about your situation. All right, so who we are, H&R Block. Our main focus is tax preparation, right? It's what we do every day. It's what we've been doing for 60 years in Canada, in the country, across more than 1,000 locations, right? So we're open all year round, anytime during the year. When you receive a letter from CRA, we're here to help. We also have specific tax experts that work with business owners. So these specific tax experts have gone through an exhaustive training on small businesses to help you with your taxes. It's more than 2 hours of training that they've been through, and every year we keep up with this training because we know taxes change every year, right? Every year we hear a new sorry, tax situations, new tax credits, new tax deductions, and also sometimes the law does not change, but how we apply the law would change from one year to another. So it's important to keep up to date with those changes as well. Um, all right, so let's get started. Let's get in the topic we're talking about. So sole proprietors and gig type workers. What do we mean by gig type workers? As I've mentioned quickly, we said it's when you're using a digital platform to earn additional business income. The most common examples include Uber, Uber Eats, Lyft, Fiverr, Turo, Airbnb as well would count in this. And you have specific tax obligations if you are in this situation because you are considered a self-employed individual from a tax perspective. And we're starting with the main idea that all income in Canada is taxable, right? So all the income you're earning worldwide, if you're a resident of Canada, has to be reported on your tax return. So this is true as well if you're earning income through a digital platform. Sorry. And starting in January 2024, there are additional reporting requirements. Those reporting requirements are not on us, so are not on us who are using the digital platform. So there's no difference, but the difference comes from the digital platforms themselves, who are now required by law to submit to CRA information about the income you earned through their platforms. So it makes it easier for CRA to identify the income you have earned through those platforms. So it's very important that you do not forget any income when you file your taxes at the end of the year, because there could be severe penalties, interest as well, for any undeclared income. Um, keep records of all your transactions. We don't repeat it enough. For 6 years, you have to keep any supporting documents for your income, also for your expenses. Those digital platforms that you use already help you, right? At the end of the year, they will give you a report to help you file your taxes, to help you identify your income and your expenses as well. But this is not enough. You have to keep also a copy of any other receipts that you have. So, for example, the gas receipts, car repairs as well. So, any expenses for your business, you need to keep track of it. CRA does not tell you the format that in which you need to keep track of those expenses. So you could take photos or pictures of those receipts. This would work if you don't want to keep them physically, or you can keep them physically, but we have to be careful because over a period of 6 years, sometimes the ink on the receipt would disappear a bit, right? So that's why we say if you scan it, if you take a picture of it, sometimes it's more efficient over time. Um, and finally, keep in mind that you might have GST and HST obligations. We'll be talking about that today. So even if it's only a side work that you have, even if it's not your main job to earn income through a digital platform, you might have to register to GST, HST. So we'll be talking about that in just a moment. Choosing a tax year end. So there's a difference if you're a sole proprietorship or if you have an incorporated business. When you are self-employed or you're earning income through a digital platform, all this business income that you're earning has to be reported on your personal tax return. So that means you file only one tax return, so the same return you've been filing every year, except that on that return there will be a schedule attached to it on which you will justify the business income you've earned and your business expenses as well. So that means this return has to be filed at the same time than you're used to. That means the due date of that return is not April 30th, but it's June 15th. So there's an additional 1 month and a half delay that you have to file your taxes. But keep in mind that even if you have until June 15 to file your tax return, you have until April the 30th to pay any amount owed to CRA. So you need to start very early in the winter. So January, February, you should already be thinking about your taxes. I know some of us are not are not particularly inclined to start early thinking about our taxes, but I can assure you, if you start early, it will go smoother because then you have the time to go through all your receipts, make sure you're not forgetting anything, making sure you're claiming every deductions, every credits you're eligible to on your tax return. So when you're self-employed, you do not choose really a tax year end. So all the income you have earned between January 1st and December 31st has to be reported on your tax return for the year. Um, and yes, I guess that's what I wanted to mention here. Um, then if you have incorporated your business or you're thinking about incorporating your business, there's a lot of factors you need to consider before you move forward with the incorporation. Incorporation, there's no minimum threshold of income, there's no minimum threshold of expenses. It really depends on your personal situation, on the situation of your business as well. Not everyone can incorporate. Sometimes some industries, some professional orders also will prohibit you from incorporating your business. So you have to really get personal advice, so advice that is specific to your situation before you move forward with incorporating your business. But once you have incorporated your business, the first decision will probably to choose a legal name for your business. But then the second question that will come up is choosing a year end. So you'll need to choose a year end, so a tax year end for your business. You have 371 days after you have incorporated your business to close your first tax year. So that's 53 weeks. There's no form that you need to use. You don't need to call CRA to let them know your year end. It's simply by filing your first tax return for your incorporated business. That's how CRA will know about your year end. There's always a possibility to change your year end after you file your first tax return, but you need um, you need a good reason to do so. So you'll need to send a letter to CRA to let them know why you want to choose your year end, and then CRA has to approve this change. So you will receive a letter if they have approved this change. Also, when you're choosing your year end, there's different factors you need to think about. So you would want your year end to be at a time of the year where you're less busy, right? Because you want some time to think about your taxes and get ready to gather all your papers. So if, for example, Christmas is a very busy time for you, well, you don't want a December 31st year end, right? Because then you might not have enough time to go over your tax documents. Same thing if you spend always the winter, for example, in Florida. Well, try to choose a year end where you won't be in Florida because then you might not have access to all your documents, for example. Another thing to think about, and that's where we can help you as tax professionals, is that there are tax deferral opportunities when you incorporate your business and you choose your year end. So this is something to keep in mind. So something we can help you navigate. If you're and then maybe the last thing here to mention is that your tax return as an incorporated business has to be filed within 6 months after the year end. And if there are any taxes payable, they have to be paid between 2 or 3 months, depending on your situation, after the year end. So this is also to consider. When should you register to GST? So this is a question that comes up a lot. It will come up really early in the process of creating your business, whether you're incorporated, whether you're a sole proprietorship, whether you're a Uber driver, because the same law applies to all types of businesses. So what I'm going to say next applies to you if you're self-employed or if you are incorporated as well. Um, There's a general rule, and then there are some exceptions. So the general rule says if the total amount of all revenues, so worldwide income, is over $30,000 for a period of four consecutive calendar quarters, then you need to register to GST. So keep in mind here, we say four consecutive calendar quarters. That means 12 months, but it's not necessary from January 1st to December 31st, right? So if you're looking back as of today and in the last 12 months, you have earned more than $30,000 in business income, you need to register to GST HST. And we're talking here about $30,000 of business income, right? So we're not considering your wages. If you have another job where you're earning employment income, for example, or you're earning investment income, we're not considering this in the threshold, but we're considering $30,000 of business income, including all your businesses. So if you have two or three businesses, for example, you're doing some deliveries, but also you're baking muffins, for example. So we're taking all those types of business income that you have, putting them together, and then we're looking if you're meeting that $30,000 threshold. So that's the general rule. Then some people might choose to register to GST HST before they meet the $30,000 threshold. You might want to do so if you are in a situation where you can claim what we call input tax credits. So input tax credits, it's simply the GST or HST that you pay on your supplies, so on your furniture. So when you have business expenses, if you're paying GST HST on those business expenses, you can get that GST HST back from CRA when you file your GST return. So some people would want to register before in order to get that refund from CRA. Exceptions to this, and some of them are very common exceptions. So the first one we say if you are a taxi operator or if you offer commercial ride sharing, so that means, for example, Uber, Lyft, you need to register to GST HST the first day you earn income. So there's no there's no question for you. There's no wait. The first day you are in business, you need to register to HST GST. Some businesses never need to register to sales taxes. This includes businesses that only offer exempted services. So most health services, so if you are a doctor, for example, or a psychologist, you don't charge GST, HST. If you offer childcare services or the lease of a dwelling for one or more months. So if you have an apartment building, a residential apartment building, you're not charging GST, HST to your tenants. It's so the same way you cannot register to GST HST. Um, and then if you're selling tobacco, alcohol, tires, and fuel, there are special rules that applies to those industries. So you have to get the right advice if you are in this situation. Um, Once you have registered to GST HST, it's not the end. It's not the end of your tax questions. There are more things to think about, and one of those things is about the quick method of accounting. So you have to ask yourself if this method is beneficial for you. We can help you make that determination because the quick method of accounting applies to all types of businesses. So it applies if you're a sole proprietorship, a self-employed, incorporated business as well. So it's the same criteria, but it's not beneficial to everyone. So in some situation, it will represent a significant tax savings, but in other situations, it might not be a good idea to register to that quick method of accounting. And what is it, the quick method of accounting? So I've put here in the presentation an example to help you understand how it works. So we're looking here at Corporation ABC Inc. We say the corporation offers translation services. The corporation and the shareholders are all residents of Ontario, so in Canada. We have annual gross sales of $300,000 before HST. So these numbers might look big here, but the same principle apply whatever the amount of sales you have for the year. There's no depreciable assets that were bought during the year. The quick method remittance rate in Ontario for service businesses is 8.8%. So how it works, the quick method of accounting, the HST rate in Ontario is 13%. That means when you invoice your clients, if you are registered to GST HST, you will charge to the client a 13% sales tax. So the client pays the tax to you, and then you need to remit that whole 13% to CRA, less any HST you have paid on your furnitures or supplies, so your business expenses. But if you're using the quick method of accounting, instead of remitting 13% to CRA in Ontario, you will remit 8.8%, which is a much lower rate, right? So it can make a huge difference if you, depending on the amount of sales that you have. But when you remit that 8.8%, you can no longer claim the refund on any HST you paid on your business expenses. So, usually a business that would benefit from the quick method of accounting is a business where you don't have a lot of expenses, which is often the case for a service business, right? Because when you offer service, you're invoicing for your time, so you usually do not have a lot of expenses. So looking at the example here that we have on the left, we say gross sales $300,000, sales tax in Ontario. So this is the sales tax that would have been paid by your clients, right? So $39,000. This is 13% of our sales. This is our amount A. So the total of sales plus the sales tax we have received is $339,000. That makes our amount B here on the left. Looking at the expenses, we say we have supplies subject to HST. So what we mean by that, we mean these are business expenses that we have incurred during the year for a total of $15,000, and we have paid HST at 13% on this whole $15,000. So we have paid $1,950 of HST. This is our amount C here that we look at the left. So if you haven't made the election to use the quick method of accounting, the tax, so the HST you need to remit to CRA is, according to the standard method, is what you have collected from your clients, less what you have paid on your business expenses. So here that will be our amount A, so $39,000, less our amount C, so $1,950. So we need to remit to CRA $37,000. Now, if you've made the election to use the quick method of accounting, you would remit the HST based on the quick method rate, which is 8.8% in Ontario. So you will calculate the amount B, so 339,000 times 8.8. That gives you $29,000 you need to remit to CRA. So there's a significant tax saving here of more than $7,000. Just to keep in mind, though, that this $7,000 of tax saving is taxable, right? So you would need to pay taxes, corporate taxes on this amount, but it's still money that you get to keep in your pockets. So, so in this situation, it would be definitely beneficial to register to the quick method of accounting. But there are some businesses that are not eligible to use the quick method of accounting. So if we, in order to be able to use that quick method of accounting, it's not a decision you make without noticing CRA. So you need to file a specific form that is called the GST 74. So when you file this form with CRA, you will receive a letter from tax authorities that tells you you are eligible to use the quick method of accounting, and this is when you can start using it. The other criteria in order to be able to use the quick method of accounting, we say here you did not revoke an election in the last year. You have a permanent establishment in Canada. Permanent establishment it means the business is operated from a physical place in Canada. So if you're not renting an office, if you're not renting a commercial space, the permanent establishment can be your home, for example. So if you're working from home, you have a home in Canada, so you would meet this criteria. And then your worldwide income, so your worldwide business income cannot exceed $400,000. Then there are some businesses that are simply not allowed to use the quick method of accounting. The most common examples include if you're providing bookkeeping, financial or tax consulting services, if you're providing legal and actuarial services as well, and then financial institutions, the government, public institutions, charities, and so on. Um, and I'm going to repeat it again because it's important, but this quick method of accounting applies if you're either self-employed or incorporated. In both situations, you might be eligible to use the quick method of accounting. Um, All right. Now that we've established the business, we've established if you need to register to GST, if you're using the quick method of accounting, then there are some common deductions that you can claim on your tax return, and these deductions apply again if you're self-employed or incorporated. One of the most common that we see is the business use of your personal vehicle, right? So that means if you're using the car that you had bought personally, you're using that car to earn business income. The rules here that you see on the slide applies only if you are self-employed, and they apply either if you're using your car just once in a while to make a delivery, for example, or if you're using your car on a day-to-day basis because you're a Uber driver or Lyft driver, for example. The expenses you are eligible to claim include the gasoline, the car repairs, interest on your car loan, depreciation on the cost of the car as well, driver license, the fees to register your car, the car insurance, and all those expenses, they need to be prorated using a kilometer factor. What we mean by that is we're going to prorate all those expenses by the number of kilometers that you have driven for your business, divided by the number of kilometers, the total number of kilometers you have driven with your car during the year. How do we make this determination of the number of kilometers? Well, that's on us, the taxpayer, to keep track of those kilometers by using what we call a logbook. So the logbook can be in different formats. Some people might be a bit more old-fashioned, so you might want to keep a booklet in your car or a sheet of paper in your car, a little notebook where you're writing the information that you need. There are also, if you're using a digital platform, for example, Uber or Lyft, they already help you calculating the number of kilometers you're driving during the year. There are also other apps that exist that you can download on your phone and websites as well, where they can help you manage this logbook, so they can help you track the number of kilometers you're driving for your business. Because this logbook is very important, right? It's a requirement from CRA. If you want to deduct car expenses on your tax return, you need a logbook. That logbook will include the date of your travel, will include the purpose of your travel, and the number of kilometers you have driven that day. Um, a common mistake that we see in practice is that the travel that you make, that you do between your home and your main place of business, that travel, sorry, that travel is considered a personal travel. So it's not a business travel. When you leave your home with your car, you're going to your office or you're going to your store. This travel is considered personal, just like everyone else, right? In the morning, we take our car, we go to our workplace, even if we're not self-employed, even if we don't have a business, right? So that's why this travel is considered a personal travel. So you shouldn't include these kilometers in your business kilometers. Um, so this is if you have this is if you're self-employed, right? So this is if you have not incorporated your business. It's what we see here on the screen. Now, if you have incorporated your business, it works a bit differently. So this is a situation where you're using your personal car for your incorporated business. And we know that the incorporated business, it's a different legal structure. It's a different entity in itself, right? Because it files its own tax return. So that's why it works a bit different when it comes to car expenses. You do not need to keep track of and the receipts of your car repairs, um, car interest paid on the loan, for example. You do not need those receipts, because when you are incorporated, you're simply using CRA's rates to calculate your expenses. So, but you still need to keep to keep track of your kilometers, so you still need the logbook. So the logbook will tell you the number of kilometers you have driven for your business during the year. And then you're going to multiply this number of kilometers by CRA's rates. And those rates for 2024 are what you see here on the screen. So it's 70 cents per kilometer for the first 5,000 kilometers. And any kilometers in excess of that 5,000 is calculated as at a 64-cent rate. There's an additional 4 cents available if you're a resident of the Northwest Territories, Yukon, and Nunavut. Um, this allowance, so that you calculate using CRA's rate, is not taxable for the recipient. So yourself, when you're reimbursing you for these kilometers, it's not an income that you will include on your tax return because you are using CRA's prescribed rate. If you're using different rates than CRA, if you're using higher rates than CRA, there might be other tax consequences. So that's why our suggestion is to use CRA's rate. Um, we have included here an example to help you understand. So if you are incorporated, we say here the shareholder, so the shareholder is the owner of the corporation, drives 1,000 kilometer for business purposes using her or his personal car during 2024. The corporation will reimburse the shareholder for an amount of $700, right? So that's 1,000 kilometers times 70 cents, which is our CRA prescribed rate. The corporation will deduct $700 from its taxable income. So that's an eligible business expense. There will be tax saving on that expense as well. The recipient, so the shareholder, will not include the $700 in in his or her income because we have used CRA's rates. And of course, I'm mentioning it again, the shareholder must keep a detailed logbook for that 1,000 kilometers driven for the business during the year. Um, Business meals. This is also a very common expense that we see when we operate a business. This rule here applies to both if you are self-employed or if you are incorporated. We say the maximum amount you can claim for meals and entertainment expenses is 50% of the lesser of the following amounts. So either the actual amount you've spent during the year or an amount that is reasonable in the circumstances. So in other words, you can never, unless you meet one of the exceptions, you can never deduct more than 50% of the actual meals expense that you have for the year. The expenses include if you are a truck driver, there are special rules that would apply to your situation. Also, if you are in the if your business is a motel, a hotel, a restaurant, that means you're buying food, you're offering entertainment, you're offering beverages to your clients. So these are there are special rules also in this situation. And then finally, and this is a very common mistake we see in practice, we say if you bill your client or your customer for the meal and entertainment costs, then you can deduct the full amount of your expense. That means, for example, if you need to travel outside of town to meet one of your client or supplier, and you need to pay a hotel, you're going to pay the restaurant at the hotel, if you're billing this expense to your client, well, first, don't forget to charge GST or HST on that full amount, right? So if you are registered to HST, GST, you need to charge it on any expense you charge back to your client. And because you have charged the full amount of the meal to your client, you can also deduct the full amount of the meal from your expenses. But in other situations, only 50% would be deductible. Also, if you're a resident of Quebec, special rules apply to meals. So there's an additional limit based on your business income, but that would only apply if you are a resident of Quebec. Home office, so I guess it's been more common in the last few years. It's something, but it's something that in practice we see a lot of mistakes. So listen carefully here because this is where the mistakes happen. We say you can generally deduct expenses for the business use of a workspace in your home as long as you meet one of the following conditions. And this is where we see mistakes. So you absolutely need to meet one of those two conditions. The first one, we say it is your principal place of business. That means more than 50% of the time you're working from home. That means we are already excluding Uber drivers, taxi drivers, for example, because you're not working more than 50% from your home, right? If you do not meet this condition, maybe you meet the second condition. So the second one says you use the space in your home only to earn business income and you use it on a regular and ongoing basis to meet client, customers, or suppliers. All right, so that means in your home you have a specific space that is only used for your business. So it's not the table in your kitchen. And this specific space, you are receiving people at your house, so either clients, suppliers, or patients, for example, um, at your home, right, on a regular and ongoing basis. So as part of your business. Um, this would include, for example, if you're a psychologist, you're receiving your patients at home, and you have an office where you're receiving your patients. So that means you would meet this condition. The common expenses you can deduct include the electricity, the gas, and other public services you're paying for your home, interest on your mortgage, the home insurance, the repairs and maintenance as well, and property taxes, of course. But again, only the portion that relates to your business can be deducted. So you need to prorate those expenses using a specific factor. The most common factor we're using is the surface of your home versus the surface you're using for your business. Also, we have included here just a quick note at the bottom to let you know to keep in mind that there are special different rules that apply if you are using your home for your employment, right? So these rules here that we see on the screen apply only if you are self-employed or if you have an incorporated business. So if you are receiving business income, but if you're receiving wages, if you are employed by someone else, different rules might apply to your situation. Sorry. Um, Audits and assessments. I'm going to start by saying we shouldn't fear audits and assessment, all right? They are part of our tax system. It's something that has been happening. It's going to continue to happen. If you file your taxes right, you shouldn't be worried when you receive a letter from CRA. Also, keep in mind, H&R Block, we're open all year round, so we're here to help at any time during the year when you receive a letter, even if it's for your incorporated business, if it's for your US return, if it's for your Canadian business return, we're here to help with that. Most audits these days are no longer conducted in person, so you would receive a letter from CRA. This is how the audit is initiated. The letter will ask you to provide additional documents, additional information that was used when you prepared your tax return. So that's why I'm saying if you filed everything properly, then you shouldn't be worried. There's a lot of information that CRE receives electronically or digitally when you file your return, for example, electronically. So you're not sending the return actually in the mail to CRA. So when you file the return electronically, there's a lot of information that CRA does not have in detail, right? So we're not sending the receipts, for example, of your medical expenses or charitable donations. So that's why CRA might simply ask for those receipts to support the amount of your claim. And nothing really that triggers that we can say this will trigger an audit. All right, there are some myths that we hear, some situations that we hear, but in the end, we have to think that we're all exposed to an audit. It can happen to you even if your return is 100% accurate. It can happen to you even if the amount of your claim is small. It's not because you're claiming a higher deduction that you will get audited. Of course, if the deduction is higher, there might be more chances you get audited, but it's not automatic. It's not how it works. When you receive the letter from CRA, there's a deadline on that letter. So that's what you want to look at first. It's usually 30 days after the letter is sent. So you have 30 days to provide the supporting documents to the agent. Um, these supporting documents can be sent to CRA through different formats. So the letter will let you know how you can send those documents to CRA. They will also let you know if you need to send the originals or if you can send copies. But keep in mind the deadline, because if you do not meet that deadline, then they might reassess your return, and then this is where your situation gets more complicated. You can always ask, I mean, not always, but you can often ask for an extension of the deadline. So if you explain your situation, for example, if you're outside the country traveling, you can explain your situation to the agent, and they might provide an extension to the deadline in order to provide the supporting documents. Um, and then we say here the audit process is not the final process. That means if you disagree with the decision or the conclusion of the auditor, there's another process that is available to you that we call the notice of objection. We can also help you with that process if it gets there. Small business returns in the US. So there are situations where you might have US tax obligations. This can happen, for example, if you're US resident or US citizen and have a business in Canada or you live in Canada, or even if you're a Canadian resident and you have establishments in the US where you're selling products, or if you're selling products through US digital platforms, for example, you might have US tax obligations. So we're here to help with that as well. Just to keep in mind, just a reminder, because sometimes people are not sure of all the services we offer. But I've told you when we started, right? I've told you our main focus is taxes from A to Z. We do all taxes here in Canada. I guess we're going to have some time for some questions because this covers all the topics I wanted to go through with you today. So we have maybe 10 minutes or so, yes, to go through some questions. I see we already have 42 questions. Um,
Yes. Let me talk you through this, Yannick. Thank you so much for that presentation. That was excellent. We have 43 questions. I'm going to go back to the beginning and pick a few. So the first one is a seller on Etsy based in Ontario, but
mhm.
sells internationally. She says they don't collect taxes on their behalf. Should they calculate HST on just Ontario sales or on everything?
That's that's a good question, and I don't want to give specific advice to a specific situation because there might be other elements I'm not aware here. But usually, so I can talk in general. Usually, when you're selling products outside Ontario, you might have other sales tax obligations. So if you're selling, for example, products in other provinces in Canada, you might have to charge GST, for example, so or you might have to register also to provincial taxes if you're selling products in those places as well, so outside Ontario.
Wonderful. Thank you. Okay, we have had a couple questions about a recording of the webinar. I apologize. I should have mentioned at the beginning, yes, we will send a link of the webinar to everyone who attended today. Okay, next. CRA keeps requesting tax installments to be paid based on previous year income tax. If the deadline is June 15th, why are they pushing for these installments and showing interest charges?
That's a very relevant question because those interest on the tax installments are very high. So you want to avoid those interests the most you can. You have until June 15 to file your self-employed tax return, right? So if you are self-employed, all your income has to be included on your personal return. That return has to be filed before June 15th. But you have until April 30th, so the end of April, to pay your taxes. So that means you need to identify the amount of taxes you owe for the year and remit that amount to CRA, or you need to send enough tax installments so there's no amount due at the when you file your taxes. Those installments, if it's the first year you are in business, you usually do not have to pay installments to CRA. So this requirement will come the second year. And you might be in a situation where you need to send them monthly or quarterly. So it depends on your situation, but make sure you do pay those installments on time.
Wonderful, thank you. There's quite a few questions around incorporation. So would you be able to give us sort of a Coles Notes version of the pros and cons of incorporating a sole proprietorship?
Yeah, absolutely. So when you decide to incorporate your business, it could be for different reasons, and it's not beneficial to everyone, and it's not necessarily related to the amount of sales that you have. So you might be in a situation where you're not earning a lot of business income, but it's still beneficial for you to incorporate your business. This could be for so the main principle we need to keep in mind is the income you earn in your incorporation is not taxed on your personal return. So, for example, if you're earning $100,000 of business income and you're self-employed, and let's say you have no expenses for the purpose of this example, so you have $100,000 of business income. If you're self-employed, you'll be taxed on your personal return on that full amount, $100,000. Now, if you incorporate your business, you're earning the same $100,000 in the corporation, and again, you have no expenses. So the corporation will pay taxes on that $100,000 at a lower rate than you're paying taxes personally. But then you still need money to live, right? Because that $100,000 is in the corporation. You need to pay for your groceries, your home, your daycare for your children. So you're going to withdraw money from your corporation. And let's say for the year, um, for all your personal expenses, you need $50,000. So you're going to withdraw $50,000 from the corporation, and you're going to pay personal taxes on that $50,000. That means there's another $50,000 less the corporate taxes that remains in the corporation, and you're not paying personal taxes on that amount until you withdraw the amount. So it could be only in 20 years that you're going to withdraw that amount, so you can invest that money elsewhere, earn investment income, so you have a higher capital to start investing than you would have personally, because personally you would have paid taxes on the whole amount you make during the year. So that's usually one element we're going to look at. But then there are other criteria you might want to keep in mind. In these, this is where you can get a legal advice, for example. So if you're in a situation, or if you're in an industry where there are a lot, you are exposed to different legal risks, then you might be in a situation where you want to incorporate your business as well. But this is more from a legal perspective, so you can get a legal advice on that. Yeah.
Great, thank you, Yannick. I think there's also a few questions regarding the quick method of accounting around that 8.8% that
Yep.
you mentioned. Just understanding why it is that, and also if there's a resource that can be accessed that explains the quick method rate in other provinces.
Yeah, absolutely. So CRA has a very interesting publication that is made available to the public on their website. So if you go on Google and you search quick method of accounting CRA, it's probably in the first links that you'll see. It explains the rates also that are used in different provinces, because the rates vary because we have different sales tax rates across the country, right? There's also specific rates that apply if you are not in a service business, but if you are selling goods. If you're selling goods, then there are other specific rates that would apply to your situation. So it's all explained in that CRA's publication. That's where the 8.8% comes from, right? So it's not a calculation, it's not a determination. It's simply what the law says. So the law says if you're in a service business in Ontario, this is the rate you need to use for a quick method.
Great, thank you. Question around GST, HST. I have a small business. Can I collect HST, GST before I register for the same with CRA?
So there's a 30-day delay that is allowed by CRA, but you shouldn't wait. And registering to GST, HST is not a long process. It's something you can do on the phone with CRA. It's something you can do online. It's something we can help you as tax professionals as well. So it's something you can register to GST, HST today, and you'll have your numbers today, right? So you shouldn't wait. But if by mistake, for example, you already charged the GST to your client, you haven't received your numbers yet, there's a 30-day period there that is allowed.
Got it, perfect. Another one around the quick method. If I didn't register for the quick method last year, can I use it for this year?
Yeah, absolutely. But before you use it this year, you need to make the election. So you need to file the GST 74. So that's how the form is called. And then you need to file this form with CRA, and you're going to receive a letter from CRA that says you are eligible to the quick method of accounting. So you cannot use it before you have received that letter.
Yeah, perfect. Uh, can public transportation expenses be deducted?
For travels that are specific to your business. So if you're leaving your home and you're going to meet a client and you're using public transportation, yes, absolutely. That price that you paid for the public transportation can be included in your business expenses.
Perfect. Okay, another question about GST. We'll just take probably two more questions. If I didn't register and didn't meet the 30,000 threshold, do I still need to charge GST?
So very important. If you haven't registered to GST, HST, you're not charging the tax to your client. um, and it's not a requirement, right? So if you're under the $30,000 threshold, it might not be relevant to you to register to HST, GST. And a common example we see is for hairdressers. So hairdressers, their clients are individuals that are not registered to GST, HST. So if the hairdresser registers to HST, then the hairdresser has to charge the tax to his clients. So it's an additional cost for the clients, right? Because they are not businesses, they are simply individuals. So they will need to absorb the cost of the tax when they're paying their hairdresser. So it's not a requirement to register to GST, HST, depending on your situation. Yeah.
Got it. Okay, this is a little bit of a US based. Selling on Amazon in the US, I'm assuming
Mhm.
based in Canada though. Do we need to pay taxes in the US too?
This is this is a question that we get a lot. Again, it depends because there's Amazon Canada, there's Amazon US, right? So it depends. It depends. So if you're you have to there's a whole situation about where the goods are starting from and where they are going, right? So you have to look specifically at the store that you're using if you have US obligations, but US obligation starts from a very different perspective than from Canada. So you would want to get a specific advice to your situation if you are selling on Amazon, yeah.
Perfect. Okay, this is going to be our last question. We do have lots more, but we'll have to wrap soon. So, what kind of proof does CRA normally require for home expenses if I claim part of rent for my workshop space?
So all the receipts that you need to keep would be related to all your expenses, right? So if you're using a rent, then you would want the rent agreement, and then any increase that you had on that rent as well, you would want to keep track of those documents as well over time, right? Because sometimes the rent agreement that you have signed might have been signed a few years ago, so you would want to keep all those documents.
Wonderful, thank you. Okay, we're just about at time, so we're going to close off the question period now. Thank you, Yannick, so much for hosting today and all of the information you shared, and thank you everyone for joining us. If we didn't get to your question, or if you have more specific questions, there were quite a few very specific questions. We do have small business tax experts across the country that are available to help. So you can book an appointment with one of them online or call an office to set up time, and we'll make sure you get matched with someone that can help you. And then a quick reminder, we're going to be sending that special offer shortly, so keep an eye on your email, and that'll also include the link to today's presentation. And we're looking forward to helping you with your return this upcoming season, and we hope to see you soon. So thank you again so much, everyone. Happy Small Business Week, and we'll see you soon.
Yes, thank you.